Hello everyone, welcome to the Currency Buzz. This is Gaurang Somaya, your Forex analyst. This time we'll be doing the review for the month of January and the outlook for the month of Feb. But before we go ahead, don't forget to like, share and subscribe to our YouTube channel and hit the bell icon for more timely updates. Talking about the dollar rupee pair, we have seen that the rupee as such has been consolidating in this range of 82.80 and 83.50 on spot for almost 4 months now. And despite a lot of events getting unfolded on the domestic front, on the global front, rupee as such has been very, very resilient. One of the major reasons has been active RBI intervention, which is curtailing the volatility. Currently, FX reserves stand at close to 620 billion as per the latest number. And we've seen that one of the announcements that is also curtailing sharp depreciation for the rupee has been an announcement that came in from Bloomberg, wherein they've proposed to include India into their emerging market local bond index. So that again has been a little positive as far as the rupee is concerned. But yes, this time it's going to be the union budget, which is primarily going to be in focus. Apart from that, we also have the RBI policy statement, wherein the rates are expected to remain unchanged. But the commentary from the RBI governor is likely to influence the rupee. And unless and until we don't see this break of range of 82.80 and 83.50 on the higher side, no significant trend would be seen in the currency. So now let's look at what to expect from the union budget. So this time it's going to be an interim budget because we also have the Lok Sabha elections which are scheduled in this year. But the currency market will be keeping an eye on a few things. First, it's going to be the capex target that the government sets in for FY25. Second, what's going to be the fiscal deficit target, and we expect that it could be around the 5.2 to 5.4% mark. Third, what growth rate the government sets in for the next financial year. And fourth, what's going to be the overall total market borrowing. And currently the market is expecting that the figure could be close to 12 to 14 lakh crore rupees overall. Talking about the major crosses, we have seen that the dollar index in the last couple of months has been trading with a negative bias, but in the month of Jan, we've seen good recovery coming in from lower levels. Most of these economic numbers have beaten estimates, but one of the major trigger which has given support to the dollar index has been the trimming expectation of a rate cut in the month of March. So that has lent quite a bit of support to the dollar. And now the focus will be on the FOMC policy statement, wherein the rates are expected to remain unchanged, but it's going to be the Fed governor's statement on the rates going ahead, which is likely to trigger volatility as far as the dollar index is concerned. But if you look at the other major crosses, yen has been the weakest of the lot, and it has depreciated by almost 4.5% in the month of Jan. And in the recently released policy statement, the Bank of Japan have held rates unchanged and also have stuck to their yield curve control policy, which did trigger a bit of volatility in the safe haven currency. And in the month ahead, we are expecting that most of these major crosses like the euro, pound and the Japanese yen could be trading slightly sideways, but with a negative bias. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.